All right, so let's chart this out. Step 1. I'm gonna go through the type of taxes subject to sole proprietorship, single member LLCs, partnership LLCs, S corporations, and C corporations. When it comes to individual income taxes, everyone pays it except for C corporations. With self-employment taxes, S corporations can avoid some of them, not all, but some. Small business taxes for beginners. Let's get into it because there has been a record-breaking number of LLCs created in the last 2 years, according to US business formation statistics. And unfortunately, a lot of new business owners have no idea how their taxes work because the game changes once you become self-employed, because you no longer have an employer who is paying and filing your taxes on your behalf, like your federal and state taxes or your Social Security and Medicare taxes. Now all those tax payments fall on you. But you're in luck because if you watch this video until the end, then you'll have a deep understanding of small business taxes for beginners. I'll jump into topics like the different types of small business taxes, how to pay taxes for LLC and other entity owners, and common tax deductions and credits that you should know about, and much more. So I hope you're excited to learn. Now, really quick, before I dive in, I want you to know 2 things. Number 1, I'm gonna go ahead and put the timestamps for this video somewhere down in the description below, so at any point in the video you can skip ahead or reference something again if you need to. And number 2, it really would help me out if you like this video for the YouTube algorithm. That way other new small business owners like yourself can find this video. All right, let's go ahead and dive in with number 1, the types of small business taxes. So remember, as an entrepreneur, you are responsible for paying your taxes now. So then of course, it makes sense to know which taxes you need to pay and which taxes you don't need to pay. Now, almost all taxes can be divided into 3 buckets, okay? Taxes on income you earn, taxes on what you buy, and taxes on what you own. Let's start off by first talking about the type of taxes you pay on money that you earn, because these are your biggest taxes, and as soon as you make some money, Uncle Sam is going to be looking for their cut since you made it on US turf, so to speak. All right, now up first is the individual income tax. This is the one that most people should be familiar with. It's where your tax rate increases as your income increases, because here in the US we have what is called a progressive tax system. And so every year the IRS releases new tax brackets, which I'll put up on the screen right now for 2022. Now, as a business owner, you are still subject to these tax brackets and tax rates if you have a pass-through business entity like an LLC, S Corp, or simply a sole proprietorship. So it is very important that you understand where your income may fall, as it helps you to predict your tax liability. Now, if you want a deeper explanation on this, then I highly recommend you watch my video on taxes for beginners, where I break down the progressive tax system with examples and much more detail than I will in this video. Also, I'm going to break down how to pay these taxes as a small business owner in the next point, but for now, let me keep going through the different types. Okay, the next common business tax is the corporate income tax. The only type of business entity that is not subject to individual income taxes are C corporations. And that's because C corporations pay a flat federal tax rate currently set at 21% for 2022, and pay a flat state corporate tax rate, which depends on the state that you do business in. Now, before you start thinking, well, okay, I want a C corporation. Hold on. Here's a quick pro tip. Okay, C corporations are subject to double taxation because the profits that are taxed must remain in the C corporation. And so if you, as the business owner, decide that you want to pay yourself, then you still could be subject to other tax rates. So C corps can be a bit tricky and something you should definitely consider talking to a tax advisor about, which, by the way, if you need help with tax planning or tax preparation, we may be able to help. Go ahead and click the first link down in the description below to learn more about how our services work. Okay, so now that you know about income tax and corporate tax, let's talk about another popular tax for business owners, payroll taxes. So if you have any employees, you must report and deposit federal income tax withholdings, Social Security and Medicare taxes where you pay half and your employee pays half, and federal unemployment taxes. And sometimes people ask me, Sean, should I look for a W-2 employee or a 1099 contractor? And of course, number one, always do what's best for your business. But as you can see, you can actually end up paying more taxes when you hire W-2 employees because some of the tax payments fall on you as the business. Now, I'm not suggesting that means you shouldn't hire employees because there are a lot of fantastic benefits of having someone who is solely dedicated to your business, but that's just the tax consequence of it. Now, closely following payroll taxes, you have self-employment taxes. This tax is specifically for those who are taxed as LLC owners, general partnerships, and sole proprietors. This is where the IRS is basically telling you, hey, since you don't have an employer who is paying your share of Social Security and Medicare taxes, then you need to pay both of them. Because once again, when you are employed, you typically will pay half of your Social Security tax, which is 6.2%, and half of your Medicare tax, which is 1.45%. But now you need to handle all of it, which brings the self-employment tax rate to 15.3%. Now, here's another pro tip. Once you start to make enough income, it could make sense to elect to be taxed as an S corporation because S corps don't pay self-employment taxes on their distributions. However, becoming an S corporation can be expensive and require more from a business owner, which is why it makes sense to wait until you have a considerable amount of net profit. I would say at least $60,000 in net profit before you consider electing to become one. So those are some of the biggest taxes when you earn as a business owner. Now let's quickly talk about some taxes on things you buy. Now the two that I have don't apply to every business, so I won't go into much detail. All right, so first up you have sales tax. You've probably seen this before printed out at the bottom of your store receipt after you purchase a good or a service. Sales taxes are a tax on retail sales and typically something that the state wants to collect. Now if you own a retail business, the good news is this tax is passed off to the consumer and it's just something that your business is responsible for collecting. Okay, another type of buy tax is the excess tax. This is a niche type of tax that applies to certain types of goods like tobacco, alcohol, soda, gasoline, and so on. So if you're thinking about getting to that market, make sure you take note of the excess tax. All right, shifting gears to taxes on things that you own, of course you have property taxes. This tax is applied to immovable property like land and buildings in states with property taxes. And most people have a good handle on this, but it is something I have to mention if you're a business owner and you're thinking about purchasing some real estate for your company. Now, another type of owner tax is the tangible personal property tax, or TPP. This is a state tax that applies to property that can be moved or touched, like business equipment, machinery, inventory, furniture, and vehicles. So if you own a vehicle, then you've probably seen something like an ad valorem tax assessed when you renew your registration. Now, about 43 states currently have TPP. Okay, so those are the main taxes you may encounter as a small business owner depending on your business or entity. Now, let's move on to the second part of this video and talk about number 2, how to pay business income taxes. So there are only about 3 to 4 basic steps you need to follow. Step 1, figure out the taxes you need to pay, which I'll simplify. Step 2, calculate how much you need to pay. Step 3, pay your taxes. And then step 4, file your tax return. Simple. All right, so let's chart this out. Step 1, I'm going to go through the type of taxes subject to sole proprietorship, single member LLCs, partnership LLCs, S corporations, and C corporations. When it comes to individual income taxes, everyone pays it except for C corporations. With self-employment taxes, S corporations can avoid some of them, not all, but some, and corporations avoid them altogether. The next type of tax are payroll taxes, and this applies to every business that has W-2 employees employees and always applies to S corporations since owners must pay themselves a reasonable salary. And the corporate tax rate, of course, only applies to C corporations. And on the chart, I've listed what tax returns these taxes are reported on. For example, single member LLCs use 1040 individual tax return and attach Schedule C, whereas multi-member LLCs must file an information return called the US 1065 return and then report their income on US 1040 using a tax form called K-1s. All right, so that's step one. Figure out where you fall and what income taxes you need to pay. Once you have that, then you move on to step number two and calculate how much you need to pay. So here's the thing. Since you are no longer an employee, instead of you withholding taxes on every paycheck, now you're going to need to pay every quarter in what is known as a quarterly estimated tax payment, which can be calculated by simply taking the total taxes you owe plus the total self-employment taxes you owe, which gives you your total estimated taxes, and then divide that by 4 to figure out exactly what you need to pay every quarter. So if you need help getting to those numbers, then I would suggest simply Googling and finding an online calculator, or simply pay 110% of what you owed in the previous tax year to avoid any penalties. Now, I also will put up on the screen the quarterly estimated tax deadlines for 2023, and as you can see, you have roughly 15 days after the typical calendar quarter ends to pay your taxes. Now, it is important to note that you don't have to make quarterly tax payments, or you fail to do so on time, then you can get hit with what is called an estimated tax penalty, which is like the IRS's late fee, if you will. And this fee, along with others, can be avoided if you simply pay your taxes on time. Now, once you know how much tax you need to pay, then you can move on to step 3 and pay your taxes, which you can do by simply going to irs.gov/payments, log into your account, and select make a quarterly payment. From there, you can choose to use your bank account or any debit card, credit card, or digital wallet like PayPal to make your payment. And then finally, step 4 is to file your tax return, so you report all your income and all your payments to the IRS. All right, now let's move on to the third part of this video and talk about some of my favorite things, which is number 3, business tax deductions. Because business owners, in my opinion, have the best tax advantages. Because as long as you play it smart, you can significantly lower your tax bill, sometimes all the way down to 0, like the rich and wealthy, if you use the tax code to your advantage and take certain business tax deductions. A business tax deduction is an expense a business can claim in an effort to reduce their taxable income. And since there are many unique types of businesses, the IRS considers a business expense deductible as long as it is ordinary and necessary to the company. An ordinary expense is something common and accepted in your type of business, and a necessary expense is something that is helpful and appropriate for your business. So if you use your imagination, that can be a lot of things. But some tax write-offs are very common, like employee expenses, the cost of hiring, wages, benefits, and even writing off taxes like payroll taxes, travel expenses, airfare, hotel stays, meals, office expenses, rent, utilities, supplies, advertising, equipment expenses, purchasing certain assets like machineries, vehicles, and even planes, just to name a few. And since businesses help stimulate the economy, many states offer specific business credits, which helps reduce business owners' tax liabilities dollar for dollar. Popular credits are the Research and Development Tax Credit, credits for hiring veterans and other employees, credits for developing your business in a certain zone, city, or county, and so on. We have a lot of videos on this channel that talk about tax write-offs and credits, so make sure you're subscribed if you haven't already. Let's go ahead and move on to the fourth part of this video and talk about number 4, staying compliant. Staying compliant with the Internal Revenue Service, the IRS, means following all applicable tax laws and fulfilling your tax obligations as a business owner. And listen, if you are not found compliant with the IRS, you could cause yourself a lot of unnecessary pain. For example, you may find yourself paying additional fees and penalties. You could find yourself getting and losing tax audits. You could lose your status as an LLC owner, which offers many legal liability protections. So how do you stay compliant? Here's 6 tips. Number 1, follow the rules of your LLC. LLCs are governed by state law, and each state has its own set of rules for LLCs, so make sure you understand them and you follow them, which may include some requirements like maintaining records, holding meetings, or electing members and managers. Number 2, keep accurate and organized records, aka bookkeeping. This will make it easier for you to stay compliant and helpful in the event if you're ever audited. Number 3, fulfill your tax obligations. This includes filing your tax returns, paying your taxes, and sending the appropriate tax forms when necessary. Number 4, follow employment laws. If you have employees, it is very important that you understand and you comply with employment laws, including laws related to minimum wage, overtime, and discrimination. Number 5, protect consumer privacy. If you collect personal information from your customers or clients, it's very important that you protect their privacy and you follow the applicable laws related to data and privacy protection. And then number 6, obtain any necessary licenses and permits. Depending on the nature of your business and the location of where you operate, you may need to obtain certain licenses and permits in order to legally conduct business. So make sure you understand what licenses and permits are required for you, and then make sure you take the necessary steps to obtain them and renew them. All right, so we covered a lot here, and if you understand all that, congratulations, you are now in good shape to understand and manage your business taxes. But there is one more advanced topic I didn't get to cover, which is IRS receipt requirements and how to substantiate any tax deduction that you decide to take. So you're definitely gonna wanna watch this video coming up next to get a clear understanding of what is required from you as a business owner, and I'll see you over there.